since we already met you, Dan, we'll start with Christian.
Fair enough.
Christian, thank you for joining us today on stage, and I think very curious to hear more about your firm and BVV and what you have done and are doing in real estate and real estate debt in particular. Maybe a short introduction from your end to start.
Yeah. First of all, for those who are not familiar with BVV, BVV is Berlin-based, the German biggest pension fund. Some of you have your retirement provisions with us, so you're highly aligned. I do my best. So yeah, and we have 35 billion assets under management, of which roughly 3.5 billion are allocated to real estate, and we are with 600 million euros in real estate debt, and the target is to increase and we see the attractiveness of this asset class and increase this share.
It's good to hear, and in the current market environment, challenged as many as well with denominator effects and obviously relative value of fixed income. How do you see that pan out for your existing portfolio?
Yeah. So we made the strategic decision to shift our portfolio, to rebalance it in total. So we increased our fixed income share and unfortunately reduced the alternative space. But always there's a but. We, as I said, increased the real estate debt space, so which is good for me.
Yeah, good for all of us. Yeah. Excellent to hear. Dan, we already, I think, had a lengthy introduction yesterday. Yep. Thank you for joining us, but maybe we start with you now, turning kind of to the wrap-up. What we wanted to do is go through a little bit the different components of the conference and what we learned and what we discussed, and get both of your, because I said if I just wrap it up, it's the way I see it, or I heard it, but it'll be interesting to get both of your perspectives on the different themes we discussed. Let's start macro. We heard the first couple conversations yesterday about certainly the economy, but what drives us, interest rate environment. There was a little bit of a different view between Dr. Traut and Mr. Leisner on sort of the ECB's potential path on interest rate cuts. How do you see that?
I guess the point of view I start with is that I'm a real estate lender and a pretty bad macroeconomics. So, and I also observe, and I think this is quite a big change from maybe even last year, but certainly the last 10 years of all of us in this industry, where interest rates just weren't a particularly interesting topic, and your view on them didn't change that often, if ever. And now I'm seeing sort of the opposite thing, which is, we underwrite a loan, we talk about, the expected returns based on forward curves, and then the next day there's a